What I have seen in a lot of these crash bros is they are actually failed individuals in the real estate business. Some of them are failed mortgage originators. Some are failed real estate agents. Some are failed underwriters. And they just became porn creators. Their porn is doom, fear. It is time to talk housing crash. More specifically, I am going to list 9 reasons the housing crash and doomers have been wrong for the last 5 to 10 years, depending on how you're counting it. The reason I'm doing this is I am being inundated with Crash Bro fans. So in this quick 3, 4, 5 minutes, I'm going to give you 9 reasons they have been wrong. They will continue to be wrong. But most importantly, I want to arm you with 9 facts that you can use to get just a little smarter and see through their BS and utter nonsense. So number 1, the housing doomers and crash bros cannot see past the last crash, aka the global financial crisis. They are so warped. Maybe they have PTSD. Maybe they were personally impacted by the GFC and they can't get out of the way. They now think that every cycle ends in a 30, 40, 50, 60% crash. That is not how housing cycles work. If you have taken the time to go back and look at the last, say, 55 years, like I have, you realize that the housing cycle of the GFC is abnormal, not normal, unusual, one-time thing. So to think that the next crash will be just like the GFC is a mistake. If you are watching a housing analyst and all they keep telling you is the next GFC is coming, probably a good sign that that creator has PTSD or is at least very biased. Number 2, I don't know how to say this one nicely, so I won't. The housing crash bros or doomers are either too stupid, too young, or too naive to look at history. History is a great teacher, and we have had housing cycles long before the GFC. In fact, if you were not too stupid, too young, or too naive, you would have seen that the U.S. housing cycle has been through a similar stretch. We have had a time in history where interest rates shot up and shot up quickly. So if you had half a brain, right, you would have looked at that and said, hey, can I learn something from this? What happened the last time interest rates doubled or tripled? Maybe, just maybe, there is something I can learn from this and get ready for this cycle. They clearly did not. Number 3, we actually had a housing crash. We did. We had a housing crash. Unfortunately, these doomers didn't see it. Still haven't talked about it. The housing crash was in transactions. We went from roughly 6.4 million transactions to currently 4 million, and I think going lower. That is a crash. That is real GDP. That is real jobs. That is real income disappearing. So again, we had a housing crash. It just wasn't where these individuals were telling you it was going to be. Next, there is an economic concept that these housing doomers do not understand. And again, it is only something you can get by looking at history. It is something called price elasticity. How sticky or how slow moving is something. If you go back and look at history, housing, specifically single-family homes, is very inelastic. These housing crash bros and doomers who are calling for 10, 20, 30% crash think that your single family home is a shitcoin in crypto. They are misguided and miseducated and wrong. Price elasticity is important. Next, again, very different from the GFC. These individuals have failed to realize that shelter is on the Maslow's hierarchy of need: water, food, shelter. And not understanding that a lot of people have a artificially low fixed rate shelter cost is an asset, not a liability. What these doomers and idiots fail to realize is that in the GFC, because 51% of loans were ARMs, the shelter cost exploded higher. In the GFC, it was not uncommon to see one of these 2-year neg-am loans go from $1,000 payment to $4,000 at point of reset. And the problem was, in that environment, your house, you could rent something similar for $1,200. So your shelter costs would go from $4,000 to $1,200 if you let it go. Today, people have a 2.7%, 3.1% mortgage, and their shelter cost is fixed at $900, and renting a similar home would be $2,000. They will do everything they can to stay in that house. They will let credit cards go to default. They will let student loans go to default. Shoot, they will let their car go to default before they see their shelter cost go from $900 to $2,000. Again, we are only at number 5. There are 4 more to go. And number 9 is my favorite. Here's number 6. These idiots and fools have not studied history of the foreclosure process. Again, if you're going to say this is the next GFC, you should go check the foreclosure timelines of the GFC, which I have done. In the GFC, it was not uncommon to have 1,000 days between your last payment and losing your home. If you're not good at math, let me just tell you, 1,000 days is almost 3 years. So yes, there is some distress in the pipeline, specifically FHA, and I do believe fraud is going on. But to think that this is all going to be resolved and the distressed inventory is coming to market tomorrow is misguided. Again, this probably shows up in 2026, best case. So again, leaning into foreclosures exploding in the market in 2025 and calling for a housing crash is not understanding the facts on the field. Number 7, if you haven't figured out by now, banks and the U.S. government will not let the housing market go the way of the GFC. They will, at a drop of a hat, create forbearance periods. They will bleed this out. They will slow roll this thing. They are not going to behave like they did last time. Number 8, calling for something greater than a 5% housing crash in any single year is historical oddity. You can go back and look at history, and there is 1 year, possibly 2, back-to-back in the GFC, where home prices fell greater than 5% in a single year. Can housing fall 5% over multiple years? Absolutely. Can it fall 10% over multiple years? Absolutely. Can it fall 10% in a single year? Very unlikely. And then number 9, this one is my favorite. These content creators, frankly, don't care about their audience. They don't care about being right. They don't care about their reputation. They have sold out to the algorithm. They know if they create their daily doom porn that you will click on it, you will watch it, you will be afraid, You will do nothing, and they will buy homes. Folks, it's probably not a surprise to you, but these content creators with mass followings are printing money. And it probably wouldn't shock you that some of them have gone from renters to homeowners. This is what they are doing. And then I did have number 10. I wasn't sure if I was going to say it, but I might as well. What I have seen in a lot of these crash bros is they are actually failed individuals in the real estate business. Some of them are failed mortgage originators. Some are failed real estate agents. Some are failed underwriters. And they just became porn creators. Their porn is doom, fear. So those are my 10 reasons, and hopefully they help you understand and allow you to ask questions. Are you thinking the GFC? Are you thinking foreclosure timeline? Are you? So that's what I got for you. I was getting bombarded, so I wanted to create the top 10 list of why housing crash doomers are wrong. Let's get into some of the data. Point one for jobs is the JOLTS report, and it surprised to the upside. Last month was 7.2 million open jobs. It was expected to fall slightly and continue on trend to 7.1. However, it reversed. It actually went up to almost 7.4 million, 7.39 to be exact. That is interesting. Again, these numbers are for May. There's a lot of people thinking that job openings would continue to fall. That did not happen. This is a surprise. Factory orders. Factory orders last month surprised to the upside, 4.3. Well, surprise to the downside. Little give back this month, down negative 3.7. We did get some earnings, and I'm actually interested in a couple of them. First, Dollar General. Dollar General beat top line, beat bottom line, and actually raised guidance. I don't know anything in detail about Dollar General's business, but I have to assume a lot of their products come from China. Again, I could be wrong. I haven't looked at their balance sheet or income statement, but I'm going to guess a lot of that dollar product comes from China. I was shocked that Dollar General actually expects to offset most of the tariffs. So again, not passing through to consumers. Next up, Signet Jewelers. Again, as we saw earlier last week, consumers were saving money in a big way, but Signet Jewelers beat top line, beat bottom line, same store sales up 4%, and they actually raised guidance. So I guess love is still in the air. Campbell actually went up with meals, but down with snacks. It's interesting to see that their meals like soup and whatnot, full meals were up plus 6%, eat at home. However, snacks were down 5%. I wonder what this might mean for Pepsi and Frito-Lay and things of that nature. And then I don't know if you've heard of a company called Ollie's. Their tagline is good stuff cheap. Again, somebody who I thought would be impacted by the tariffs. They actually beat top line, beat bottom line, and reaffirmed outlook. So again, we are starting to see more and more retailers say, you know what, we're gonna eat this, or we're gonna force the creators or production facilities to eat that. We did get some Fed speak. Let's go for that, and we'll wrap up today's discussion. Goolsbee, the latest PCE reading was the last pre-tariff print. Again, folks, I think the Fed is setting you up for inflation to rise. Remember, we've been telling you that was coming all year. It's just how the math works in the base effect. Still think rates can come down in 12 to 18 months. Again, we have a Fed president saying no cuts in 25. Yes, no cuts in 25. Worried about tariff impact the next 2 months. I think that's kind of funny. I don't know that he's really concerned about the tariff impact. I think they're going to blame the tariffs. Folks, the base effect the next 3 months is not good. It is going to make inflation look like it is rising. Fed President Logan, we have the time to see how things play out. Again, they're going to wait and see. Tariffs risk higher inflation and higher unemployment, right? Stagflation. And then lastly, we do have Fed President Bostic this morning saying We are not declaring victory on inflation. Again, I think the Fed is telling everybody, hey, the next 3 months, inflation will be going up. It is just math. And then finally, need to see more progress on inflation before we have rate cuts. Again, Fed is clearly in wait and see mode. Folks, I hope you have a great day. Hope you appreciate that list of why the doomers have been wrong for so long. Hopefully you get a little better, smarter. You can ask questions. When they say things, you could say, hey, what happened pre-GFC? What happened in the savings and loan crisis? What happened the last time interest rates went up? Do you guys remember all of the doomers telling you this math? For every 1% interest rates go up, housing has to crash 10%. No, it doesn't. No, it doesn't. We have had many times where interest rates are going up over the last 55 years. We had some times where interest rates went up 500 basis points. Housing did not crash 50%, you idiots. So again, these guys do not care about you. They do not do their homework. They do not look at history. They have simply tapped into the YouTube algorithm. They have figured out that if they create doom and fear, that they will print money. Lastly, they do not care about being right. How many of them have admitted to being wrong year after year after year? Folks, at the end of the day, housing could absolutely crash 5, 10, 15, 20%, but not in a single year. It is very, very unlikely. So again, folks, look at history, understand what is out there, do the work, get great deals. Remember, 2025 is a buyer's market, the year of the investor. We are going to keep talking about the possibilities and opportunities. Folks, have a great day. Take care. Later.